Welcome back to another Explainer. Today, we're unpacking an absolute behemoth, Carnival Corporation. Whether you're an investor, a seasoned traveler, or just someone who loves a really good business breakdown, this one's for you. In short, Carnival has built a frankly brilliant, captive audience business model. That's their engine. But they are fighting some massive growth challenges, specifically heavy debt and high fuel costs. We're calling those the anchors. So let's dive right in. 37.2 million. Just let that number sink in for a second. That is essentially the entire population of Canada packing their bags and heading out to sea. According to the State of the Cruise Industry report, we're expecting to see 37.2 million ocean-going cruisers globally in 2025 alone. It's an absolute tidal wave of demand, and it really shows just how booming this industry is right now. Here's our roadmap for today. First, the global cruise boom. Second, Carnival's money-making machine. Third, high costs and heavy debt. Fourth, unpredictable global risks. And finally, charting the future course. Section 1, the global cruise boom, an ocean-sized opportunity. So you might be wondering, who exactly are these 37 million people fueling all this industry demand? Well, North America really sets the global tone here. The average cruiser, they're about 47 years old, taking a vacation that lasts exactly 7 days. It's that classic week-long getaway where your biggest worry is just figuring out the buffet line. This highly consistent, totally predictable demographic is the exact foundation Carnival builds its empire on. Section 2, Carnival's money-making machine, the engine. To capitalize on all that predictable demand, Carnival relies on a market oligopoly. Get this, Carnival, alongside just 3 other main competitors, controls a staggering 80% of global cruise industry capacity. They aren't just playing the game. They are the world's largest cruise operator. They hold the absolute biggest bucket to catch that tidal wave of vacationers. And they cast a massive net. Carnival doesn't just sell one type of vacation. They have a remarkably diverse brand portfolio. They capture budget-conscious families and active vacationers with contemporary brands like Carnival Cruise Line, Ida, and Costa. But they also capture the high-end, luxury seekers with brands like Princess, Holland America, Cunard, and Seabourn. They literally have a ship for every single demographic and every wallet size. But how do they actually extract the cash? Well, it starts with passenger ticket sales. That's your basic bundle for the room and meals. But the real genius of their model, it's what happens after you buy your ticket. Once you're on board, you are in a completely contained environment, spending money at casinos, specialty dining, and shore excursions. And to take it even further, they own captive ecosystems, like private islands and exclusive port destinations. So you get off the ship, but you're still handing your wallet over to a Carnival-owned beach. It is a brilliantly designed, self-contained economic engine. Section 3, high costs and heavy debt, the anchors. Okay, so we've seen the roaring engine, but here's the great paradox of Carnival Corporation. If demand is at absolute record highs, and S&P Global reports they actually have 93% of their 2026 inventory booked already, what on earth threatens their growth? Why isn't it just smooth sailing from here? The answer comes down to a few massive vulnerabilities, starting with this single double-digit number, 11%. According to S&P Global Ratings, Carnival does not hedge its fuel consumption. That means they're totally exposed to the open market. Remember that 11%? That's the chunk of their operating expenses eaten up by unhedged fuel costs alone. Think about airlines for a second. They lock in gas prices in advance to manage risk. Carnival doesn't. So if global oil prices spike, Carnival's profitability takes a direct, unmitigated hit. And when you have massive corporate debt to pay off, this is a very heavy anchor dragging on their growth. Section 4, unpredictable global risks, stormy waters. Beyond their internal finances, Carnival faces a steady march of compounding external risks. You've got geopolitics and inflation, which can instantly kill demand or jack up operating costs. You have severe weather. You simply cannot sail a floating city into a hurricane. Then there are immense supply chain and labor hurdles just to keep 160,000 employees staffed across the globe. And finally, cybersecurity threats. And that last point, it's not theoretical. Hackers recently breached Carnival, exposing the data of nearly 6 million customers. When you run a massive digital booking engine holding personal information from millions of global travelers, operational failures like this show the very real scale of modern risks they face. It's not just about keeping the boats afloat, it's about keeping the entire digital fortress secure.
Section 5, Charting the Future Course, Restructuring and AI.
So how are they cutting these anchors to navigate out of these dangerous waters? Well, leadership is making some aggressive strategic maneuvers. They're unifying their complex dual-listed corporate structure under one single umbrella. They are controversially migrating their legal incorporation from Panama to Bermuda to align with recognized international financial standards. And they're leaning heavily into AI, using artificial intelligence to ruthlessly drive efficiency across all their brands and push those profit margins higher. They're doing all of this because the ultimate prize is still growing. Despite the heavy debt, despite the fuel exposure, the global forecast remains incredibly strong. We're looking at a projected 42 million passengers globally by 2029. The engine of consumer demand? It is still roaring loudly. Which leaves us with the ultimate question. Can Carnival's aggressive corporate restructuring actually outpace the rising tides of debt, unhedged fuel costs, and global inflation? They've built the perfect business model to capture a booming market, but managing the immense weight of their anchors is going to determine if they truly sink or swim. Next time you see a cruise commercial, you'll know exactly what's happening below the deck. Thanks for joining me on this explainer, and I'll catch you on the next one.